Good morning. This is Michelle Comer, North Dakota's Commissioner of Commerce. I want to welcome you to today's special business briefing. There are 1,023 attendees on the call this morning. Thank you for taking the time to join us. The goals for today's session are to provide a high-level overview of the status of the Economic Injury Disaster Loan and Economic Injury Disaster Loan Advance, the Paycheck Protection Program and PPP Flexibility Act, and to review the significant changes made by the Paycheck Protection Program through the recently enacted Paycheck Protection Program Flexibility Act and the important changes that it makes to the PPP with a deeper dive on loan forgiveness. And I am pleased once again to welcome Al Hout, District Director of North Dakota's SBA office, to walk us through that in a moment. We expect that this section will address the hundreds of questions that were submitted in advance of this session. I will also introduce to you our Interim State Health Officer, Dr. Andy Stahl. We will leave you with a few reminders. And last but not least, we will hear a few updates and closing remarks from Eric Spencer, President and CEO of the Greater North Dakota Chamber. But before we move into that, I want to say thank you and congratulations to the North Dakota business community. Congratulations, because in the days since the words COVID-19, the new coronavirus, unprecedented, all became part of our daily vocabulary, North Dakota has been ranked number 2 on the list of states most open for business. 2 North Dakota cities made the list of the top 30 best places to live after the pandemic. And we have worked so well together as a statewide community to support one another. Congratulations also because more than 19,000 North Dakotan businesses accessed the first come, first serve Paycheck Protection Program loans through local lenders for more than $1.7 billion in the first round after the program went live. It has been widely reported that North Dakota received an outsized share of the PPP. Time magazine recently reported that North Dakota was number 1 on the list of states receiving PPP funding when considering population and the number of small businesses. I want to say thank you because while the effect of a drop in oil prices and this global pandemic are severe, I believe that through our ability to collaborate, move quickly, and work hard, traits that characterize the people of our state, we will do the best job possible in preserving both lives and livelihoods. Now, 97 days into a state of emergency, we at the North Dakota Department of Commerce and Team North Dakota continue to work to support you, North Dakota businesses, who, as we've said in this state, are not anonymous. You have faces and names, and you are our friends and neighbors. I want to thank my team at the Department of Commerce for the hard work over these last 97 days. And after 9 business briefings attended by thousands of people and a significant amount of feedback that these efforts have been helpful, we are really pleased to offer this session to provide important information to help your business continue to be successful. The disclaimer slide. As usual, before we get going, I want to make note that we have offered this important disclaimer at each of our business briefings. Today's session is no different. The resources offered through the CARES Act work differently for each business and unique circumstance. Also, while we scheduled this business briefing with the hope that the SBA Treasury guidance would be finalized by this time, that is not the case. We await final guidance, and we will share that on the Business and Employer Resource page at ndresponse.gov when it is available. It is important to work with your banker, lender, accountant, tax professional to determine how the EIDL, the PPP Flexibility Act, and other CARES Act resources affect your business. So before I turn it over to our expert, Al Hout, the District Director of North Dakota's SBA office, to discuss the PPPFA and specifically the forgiveness feature, I'll provide a high-level update of the EIDL and the EIDL Advance, and also introduce the changes made by the PPPFA before Al goes into greater detail. As a reminder, The EIDL is a low-interest, long-term loan made through the SBA for certain business expenses, including payroll costs and qualified expenses not already covered by a PPP loan. A business can apply for the EIDL loan, the EIDL advance, or both. Notably, if a business receives the EIDL advance, even if they are not approved for or accept the EIDL loan, this advance is forgivable. Advances may be requested in an amount up to $10,000. This is tied to headcount, with companies being eligible for $1,000 in advance per FTE. We mention this today because the Small Business Administration on Monday evening announced that it is reopening the EIDL and EIDL Advance portal to allow small businesses once again to apply for the EIDL and EIDL Advance, as the funding is not yet exhausted. As you may recall, this portal was closed some time ago, with the idea being that there was enough applications in the pipeline to exhaust that money. But again, the portal has been reopened and the money is first come, first serve, so time is of the essence. Please note that if you have already applied for the EIDL, you need not reapply. Next, onto a PPP FA overview. This bipartisan act was signed into law on June 5th. The modifications provide borrowers more control over the use of PPP funds and make it easier to obtain forgiveness. The bulk of our time today will be spent with Al discussing forgiveness. But first, here is a summary of key changes that you should be aware of. First, the Small Business Administration initially released an interim final rule defining that the minimum maturity date was 2 years. The PPPFA has extended that term to 5 years. So for loans approved after June 5th, the maturity is 5 years. For loans approved before June 5th with a 2-year maturity, the lender and the borrower can agree to extend the maturity to 5 years. It takes both the lender and borrower to agree. Also note that the borrower can request forgiveness anytime during the 24-week period that Al will discuss in a moment. The second key change was an extension of the covered period. Under the CARES Act, the covered period of the loan, in other words, the time period in which you were to have spent the loan funds, was February 15th to June 30th of 2020, an 8-week period. The PPPFA extended the covered period to 24 weeks from the origination date of the loan, or December 31st, whichever is earlier. Please note that a borrower who received a PPP loan before the enactment of the PPPFA may still elect to use the original 8-week period. The third significant change is the extension of the timeline to rehire employees and good faith exemptions. Ineligible for forgiveness, ineligible for forgiveness, ineligible for forgiveness is reduced in proportion to the loss of full-time equivalent employees between February 15th and 30 days after the enactment of the CARES Act, which was April 26th. However, borrowers would not be subject to reduced PPP loan forgiveness if they rehired employees by June 30th. That was under the original CARES Act. Now, the PPPFA has explicitly extended the deadline to rehire employees from June 30th, 2020 to December 31st, 2020. Al will discuss this in greater detail. The fourth significant change was mandatory payroll spending was reduced from 75% to 60%. The SBA's interim final rule originally limited forgiveness to borrowers who spend at least 75% of the PPP loans on payroll costs. This is now 60% under the PPPFA. Fifth, the SBA's interim final rule originally said that borrowers would not have to make any payments for 6 months following the date of disbursement, and may even receive authorization from the administrator to defer loan payments up to a year. The PPPFA has extended the deferment period to the date on which the lender is reimbursed by the SBA for the forgivable portion of the loan. Sixth, under the CARES Act, employers were able to defer the payment of applicable 2020 employment taxes, including Social Security, with 50% due on December 31st, 2021, and the remaining due on December 31st, 2022. There was, however, an exception for PPP loan borrowers who sought loan forgiveness. In other words, a business could not defer payroll taxes and receive PPP loan forgiveness. The PPPFA has removed this exception, allowing borrowers to be eligible for tax deferrals as well. Now I'm going to turn it over to Al, North Dakota's District SBA Director, and his colleague Eric Giltner, SBA Senior Area Manager, to walk us through in greater detail PPP loan forgiveness, specifically the changes that were made by the PPPFA.
Thank you, Michelle.
You're welcome.
And thank you to the Department of Commerce for allowing us an opportunity again to share our updates on our programs, and also to the Eric and the Greater North Dakota Chamber for hosting the event today. As Michelle said, Eric and I will be going through some of the nuances of the forgiveness application as we see it today. And on the next slide, you will see that the information is subject as of today. Next slide again, please. The information is updated regularly. SBA and Treasury policymakers continually modify and review the comments that are coming in from business owners and business associations, and as part of that they will modify and change the implementation. So there's regularly updates on those two websites for the Paycheck Protection Program, the sba.gov/PPP, and also the treasury.gov site, in the form of interim final rules and frequently asked questions. So I would encourage business owners to regularly check those sites to make sure that they're following the most recent guidance. Just as a reminder, the Paycheck Protection Program is a loan designed to help small businesses keep their workers paid, and SBA will forgive up to the full loan amount if the employer keeps their employees originally for the 8 weeks, now extended to 24 weeks, as Michelle said, and or use the money for payroll, rent, mortgage, interest, utilities, and a few other expenses that have been added over time. On the next slide, I'll turn it over to Eric Giltner, who is the Senior Area Manager in Grand Forks, who has taken upon himself to review in depth the process for completing a application for forgiveness. He's looked at the different sections of the forms and has developed an example, and will take us through a high-level overview of the application form itself. At the end of our presentation, there will be a list of a couple other presentations that we're doing, hosted by our SBA resource partners. Those calls will be next week, and on those calls, Eric is going to take us through a deep dive on the application documents, building the document kind of step by step. So encourage you to also, if you're looking at the documentations and you think you need some additional guidance, feel free to attend one of those sessions as well. With that, I'm going to turn it over to Mr. Giltner, and he's going to take the bulk of the presentation, and I'll add some comments as we go. Eric, take it away.
Very good. Thank you, Al. Yes, the next slide should show that there's several parts for the forgiveness form, and there's actually now two forms. There's one called the EASY form, which is for sole proprietors and those organizations that have pretty much met certain requirements for and have kept their people on work. We're going to go through the regular application form, and we're going to kind of set maybe an example of somebody who ran into problems in a sense and is now glad that the Flexibility Act has been passed. So these are just the parts that we have here, the the loan forgiveness form itself. The borrower has to make some representations and certifications. We'll look at that down the line. There are worksheets and tables for looking at full-time equivalencies and calculating the compensation and proving that you paid these employees. There's also a safe harbor determination. Maybe there are things that are outside of the the realm of the employer that we just can't control this. Some things can happen, and you can be brought back to safe harbor and get forgiveness for that particular employee. We'll look at an example of that. Al will cover the list of required documents for submission and retention, and then there is a simple borrower demographic information form that needs to be filled out. And so we can go to the next slide here and just kind of give you sort of an update when you're preparing this work, when you're preparing your documents. I recommend to print it out one side per sheet, because you end up going back and forth between the instructions and everything else, and there is some bouncing back and forth. Just make sure you read the instructions and go through it very, very carefully. So let's bounce to the next slide, and we'll set up our scenario here. What I did is I just created the scenario for a bakery. Alexander Hamilton, he's the owner. He's an LLC. He's chosen to be taxed as a sole proprietor. So that means that he cannot claim health and retirement contributions on this. There are two assistant managers, Martha and George. They make over 100 grand in salary. So there's a limit in the PPP for those who make over 100,000. All you can do is claim 100,000 at most. There are 6 other salaried employees and their various payments. And I think the important thing here is that Madison, Nightingale, and Franklin will not work full-time during the covered period. Now, employers have found that some people didn't want to work, just for a variety of reasons, health concerns, whatever. And so some of these things have made this application for full forgiveness a little difficult. And that's why the new act is really important. Now, one final note here before we go to the next slide is that Franklin has decided he doesn't want to work full time anymore because he's going to find a cure for COVID-19. And we'll see how that happens, how that affects this particular one. Next slide, please. This is the beginning of the application. We want to make sure that you're very careful that you put the information on your business with the correct name and the correct identifiers. You're going to have an SBA loan number and a lender loan number. In this case, his PPP loan was $150,000, just $159,000. It was distributed on the 20th. He had 8 employees at the time of the loan application and 8 at the time of the forgiveness. He also received an EIDL of $9,000. Now, Al, you want to mention again what's going to happen there?
Yeah, it's interesting on this application that this is the only part where it shows the $9,000 EIDL advance amount. And as we've been saying throughout this whole process, the EIDL advance will be deducted from your forgiveness amount. So when you as a business takes this application to the lender's going to key that information into their application, their checklist, and put it into their system. And they'll submit it to SBA for forgiveness. SBA then will pay the bank the forgiveness amount that's quite honestly requested on your form minus this advance amount. So don't be confused or concerned at the end of the day when there is a balance left over. Because of this EIDL advance, it's going to be deducted from your forgiveness amount. There will be a balance left over. Eric?
Very good. If we can go to the next slide, please. The next part of the application asks you to declare what kind of payroll you have. In this case, it's a weekly one, and it also starts every Sunday. So they give you a couple of options here. The covered period is when your loan is dispersed. And if your loan was dispersed on April 20th, then your payroll period is the 20th of April through June 14th. But in this case, they pay every Sunday. And so they're going to allow them to use an alternative covered payroll, which would be April 26th as a Sunday, and the last day of that period is June 20th. Now with the new Flexibility Act, we're allowed to go up to 24 weeks. So that is going to allow them to go all the way up to October 11th or 12th. I'm not sure if I have that date right, but again, it gives them a lot more flexibility for spending this money. So let's go to the next slide, please.
Eric, one comment. I just want to make sure everybody understands that if you use up your funds before the 24 weeks, whether it's at 10 weeks, at 12 weeks, at 16 weeks, anytime you're ready to request forgiveness after the 8 weeks, you can request forgiveness to the lender.
Great. Good point. The PPP Schedule A worksheet is part of the application. It's where you go to determine payroll costs that you have actually spent during the covered period. It also helps you identify your full-time equivalency that you had during the covered period or alternative payroll period. And then also it allows for you to identify full-time equivalency reduction exceptions. And these are due to employees who are fired for cause, they voluntarily resigned, or they voluntarily requested and received a reduction of their hours. Also, if you had an employee who refused a good faith written offer of employment. And it also identifies how we can get a full-time equivalency reduction to bring us back to safe harbor so we aren't penalized by that. Next slide, please. This is an example. This is a table 1, which is in the worksheet and is part of the form that you're going to fill out for those employees who made $100,000 or less. And you can see my 6 employees are here. It shows that I have 6 employees, what their cash compensation was during the covered period. And this example only goes through the 8 weeks. And you can see that 3 of the employees were full-time and the other 3 had various levels of part-time. We're going to calculate their salary and reduction hours. And in this case, because both Florence and James Madison, who were working part-time, were brought back to full-time on the 30th of June, there was no salary or hourly wage reduction for them. But Ben Franklin wasn't. And so let's just go to the next slide. And it's kind of a busy slide, but it's right in the handout there, right in the worksheet. It's how you determine what his wage salary reduction would be if he was not covered by any exception. And basically, I'm not going to do all of the math, but because he did not come back to full-time on June 30th, he would see that he would have a reduction all the way down to the bottom right of 1,846. So if we can go to the next slide, please. That would be the amount that we would have to reduce for Ben Franklin's salary reduction. But we now get to do later on a check to see if we might have an exception. So let's go to the next slide, please. This is table 2, and this is for employees who make more than 100,000. Both George and Martha, and are there, and they have their full time, and their salary is 30,000. So we can go to the next slide, please. This continuing on with the Schedule A, we're putting together the information on all of our compensation that we spent during this period. We can go to the next slide. And now we're going to put together some more information about non-cash compensation. So the total amount paid for by the borrower for employee health insurance, that is calculated there, $300 per employee. There's a 5% contribution for retirement plans, and also the total amount for employer, state, and local taxes. And then we add in the compensation to the owner. If you remember, he chose to be taxed as a sole proprietor. And our total payroll taxes in this particular example is $107,800 plus dollars. Next slide, please. There is a safe harbor reduction too, so that if we didn't bring all of our employees back, we might get some kind of a percent deduction on our what we're going to get paid or forgiven. And in this case, we had 8 employees. We had 7.5 full-time equivalency on June 30th, and so we would have to calculate a reduction because that wasn't brought back to a full 8. Next slide, please. In following the instructions, we see that we're going to have a percent reduction of 0.9375 because Ben Franklin did not come back to full time. Now, this might not be the case because safe harbor is not met, or is it not met? Let's go to the next slide, please, and let's look more closely at Ben. You can see that there are FTE reduction exceptions, and you know, it could be somebody who we made a good faith written offer to hire, rehire, and they said, nope, I'm not coming back. I'm going to retire, whatever reason it has. Or it may be that the employee voluntarily requested and received a reduction of their hours. Now, Ben wants to go find a cure for COVID-19. Our North Dakota businesses are going to find that they had a lot of people who said, look, at my spouse is working. I need to go back in less hours because I'm taking care of children at home, or I have brought a parent home from a nursing home, or for some reason, they're just not able to come back. Okay, and so they've asked for this. So let's go to the next slide, please.
One note I want to mention, Eric, on this one, it's critically important that if you did fire somebody or they resigned, there is a reason for them departing the company, is that you make sure you document that very well. If it's that they resigned, that you have a letter of resignation in your file, or if you did fire them, that you document that why you fired them for the cause. That's going to be critically important when we have to come back in and review to make sure that it's allowable, that you have good, accurate documentation.
Very good. And even in the case where you had an employee who you contacted and they wouldn't respond, if they didn't show up for work, you have that's a good reason for firing them, for releasing them. And you could document that we made this effort to contact that employer, or employee. So in this case, Ben has an exception, and so now we don't have a 93% reduction. Safe harbor is met. And let's go on to the next slide, please. So we're now done with this, and let's go back to the forgiveness application. We're going to look at other expenses. So let's go to the next slide. Go ahead, Al. I'll let you talk about this.
This is another one that where over time we've internally reviewed a lot of the different types of expenses that could qualify for forgivable expenses. Early on, we talked about just mortgage interest. And as we expanded some of the definitions, it's not only just mortgage interest like you would typically consider on your business property mortgage interest, but it also includes equipment loans. So as the example on the screen talks about interest on your auto loan as your business, as long as it's your business, a vehicle that you use in your business, you can include your interest on that. Utility expenses has greatly expanded as well. So we now allow gas even used for your business-owned vehicle, natural gas to heat your business buildings, telephone, landlines, and cell phones have been deemed an allowable utility expense to be forgivable, and that includes your internet service. The water bills, obviously, utility. Going down to the last bullet item, you'll notice we have a colon there that's farm and ranch related. There is a lot of questions about what's included for farm and ranch operations. And one of the questions that have come up would be cash rent for land. And as of today, the early indications is that cash rent for land is an allowable forgivable expense for farmers as long as that expense has been incurred and paid during the forgiveness period. So a lot of cash rent contracts happen at the end of the season. In order to qualify, you would have to pay not the full amount, but what's incurred during the recoverable period of, and if you're following this example and do a request for forgiveness in 8 weeks, it's only the 8 weeks worth of the cash rent that could be forgivable. So as a farm ranch operation, you'd have to calculate the 8 weeks of expense, pay that now in order to have it counted towards the forgivable expense for this request. Eric?
And Al, the very second line up there, it says, kind of a good reminder, the type of expenses that you can do, they also must be found on the 2019 tax forms, 1040 Schedule C, F, or 990 for nonprofits. So what we're trying to get at here is that we're not going to accept somebody who just put some new costs in simply because they might be able to get it forgiven. They have to be a business cost that you have consistently had. Next slide, please. Okay, in this example, there was no mortgage interest. Mr. Hamblin owned his own building, but he did have business rent and lease payments, $18,000, business utility payments of $18,000, and you can see that there were, adding up for him. And now, as we go to the next slide, we're able to finally put it all together, and we got our payroll costs of $107,000. We've got our business and utility payments. There was no adjustments for full-time equivalency, so there's $0 taken off there. We add those amounts together, and we're at $140,000 with $101. Again, there is no full-time equivalency reduction quotient, so this is 1. We multiply that by the total amount that we've incurred, and that again is $140,101, which is line 8. Our PPP loan is listed on line 9. That's $159,367. Under the 8-week program, the original program, it was a 75% requirement. We are asked to divide line 1 by 0.75. That's $142,000. If you divide it by 0.60, which is now allowable, that number becomes much bigger. So the forgiveness amount becomes the smallest of lines 8, 9, and 10. In this case, it's line 8. That is the amount that you'd be forgiven. If we look at the very bottom blue banner, you can see that the loan was for $159,000. Subtracting what we're forgiven leaves us with a $19,266 loan. Now, with this particular company, they would be much better off to continue for the 24-hour or 24-week period. As they continue to pay these employees, they will increase those salaries and be able to recover maybe the whole amount as they go through. So this particular business would be recommended for them to wait the 24-week period, or as soon as they reach the amount of their loan. Next slide, please. It's very important for me to let people know, as a business owner, you're going to be asked to initialize representations and certifications that these items here, the funds requested for forgiveness are required. I'm not going to read each bullet point there, but you're acknowledging that I've done my best efforts to spend the dollars properly. Excuse me, and my tax documents are correct, and I've agreed to provide additional information. So if you're relying on another person to do this for you, or your lender, make sure that you are involved and that you look at everything that's in there, because you are going to have to sign this. Next slide, please. Just going to skip this one real quick. It's an optional demographic information form. So, Al, you want to take on the required documents?
Sure. So as we talk about all along here, you have to be able to support your payroll expenses for the covered period and your non-payroll expenses that were incurred and paid for the covered period. So payroll documentation is to verify the actual cash compensation and the benefits that you paid during the covered period. There is also an alternate payroll period where if you got your loan funds dispersed in your account maybe on a Wednesday and your payroll starts the following Monday, you can use the payroll period starting Monday and the 8 weeks from that Monday payroll period to have it's called the alternate covered period. It just makes the tracking the payrolls, the funds you used for your loan, a lot easier if you follow your payroll period specifically. And again, from 8 weeks to 24 weeks, there really should be very little problem accumulating enough payroll costs to cover your forgiveness amount. The full-time equivalent documentation, also the form does a good job of helping you delineate the average or your full-time equivalents pre-forgiveness period and after your forgiveness period. But you have to be able to document that, have a list of your employees to support the request to the lender. Non-payroll expenses, same thing. You have to be able to document that those expenses were in service or were obligated or you had them in your business prior to February 15th and that you paid for those during the recovered period. One note, you also have to maintain those documents for 6 years after either the forgiveness period or the loan was paid in full. So it's just not 6 years from when you submit it to the bank. Next slide, please. Here's a list of documents that you need to maintain but don't necessarily need to submit to your lender. The worksheets, individual employee information that was listed in tables 1 and 2. And again, that critical piece is documentation, any job offers or refusals to come back to work. And if you can document that, have that in your file, maintain it, that can help support your full forgiveness amount. Next slide, please. Once you develop this form and you have it all put together, you submit it to the lender and we mentioned as early as 8 weeks following the date of disbursement, or if you want to extend it to any time from 8 to 24 weeks, it can be at 10 weeks, 12 weeks, 16 weeks, as soon as you use up the funds. The borrower will submit the forgiveness application and all the supporting material to the lender. And I want to caution everybody, as Eric had mentioned, it's the borrower's responsibility to complete the documentation, to complete the form, sign the form, initial off on all of the certifications. That's all your responsibility and you're liable for it. So once you submit that then to the bank, the bank will review that for forgiveness, and if there's any discrepancies, they will try to work with you in negotiating or clarifying what they see versus what you submitted. The lender has 60 days to process and verify that information. So have some patience with your lender once you submit it. They're going to take some time. They've got a lot of loans on their in their portfolio right now. Not to mention their regular day-to-day business operations continue as well. So it's going to take them some time. The guidelines give lenders 60 days to process and verify that and submit it to SBA. Just a side note, as we talked about documentation and guidelines and things coming out regularly, today, as of right now, we have still not provided the documentation to the lenders what they need to complete and submit to SBA. So just please have some patience with your lender. SBA then will review the information. Most of it should be an electronic review, but there are certain loans that we will pull out and review, such as it's been documented that loans over $2 million will have a potential SBA audit to make sure that the program was used appropriately and the eligibility was completed correctly.
And Al, I'd like to...
just a second, Eric. SBA sure. Then has 90 days to, in the guidelines, to review the lender's submission and pay the lender out to for the forgiveness amount. Eric?
My apologies for interrupting. I thought you were done. I just want to put out one caution real quick. There are a lot of third parties out there that are doing Excel spreadsheets and so on that'll take you through and come up with your final forgiveness amount. And I think it's very important if you use that to make sure that you're also doing the paper copy to make sure it's right. We can't guarantee that those are correct.
Yes. On the next slide, we're going to talk about the the upcoming training that's going to do a deeper dive on this example. But I also want to mention that, again, how things change so quickly. Yesterday, the SBA policymakers issued the application for forgiveness EZ form, and there is some criteria that if you maintain your complete payroll, you maintain your complete full-time equivalents, that you can use the EZ form that will streamline the application for forgiveness. However, the documentation remains mostly the same. You still have to be able to verify the funds were used appropriately and verify that you did maintain your full-time equivalents. As you will see on the screen, our SBA resource partners, the North Dakota Small Business Development Center, the North Dakota Women's Business Center, in conjunction with SCORE and the Veterans Business Outreach Center, are hosting 2 sessions next week, Tuesday and Wednesday, to help us educate lenders, provide a little bit deeper dive. So feel free to reach out to those organizations and register. If we do get there's a limited number of registration. If we do bump up against that, we will try to increase it. The session will be recorded and available from their websites. And if there's a demand, we will continue to offer more sessions in the future. With that, thanks everybody for attending, and I'll turn it back over to Michelle.
Thanks, Al.
You're welcome.
Great. Well, Eric and Al, thanks again for joining us. And I just want to reiterate encouragement to attend these sessions that Al just referenced. They are truly a step-by-step guide. You can bring your own information, your own application, and walk through that process to get what will feel like personal assistance. I also want to make note of some key takeaways that you have heard today. First, both the EIDL and the PPP offer financial resources to businesses affected by COVID-19. They both offer funding that does not have to be repaid under certain circumstances. The EIDL advance has been reopened as of Monday night. The EIDL advance does not need to be repaid. Under the PPPFA, it is now easier to maximize the amount of the PPP loan that can be forgiven. In other words, not paid back. And also, if you do apply and are approved for either of these, you do not have to accept the funds. So the question you may want to ask yourself and your financial professional is, why would I not apply for these funds? So again, not too late to apply for the EIDL loan, the forgivable EIDL advance. The money is first come, first serve, so time is of the essence. And remember too, that if you're not a business that has already applied for and received the PPP loan, the second round of PPP funding still has funding available, and it is not too late to apply. However, the application period is only open through June 30th. As a reminder, the EIDL loan and the EIDL advance are applied for directly through the SBA on the SBA website. The PPP loan is available through your local lender. Remember also that under the PPP-FA, the Flexibility Act, it is now permissible for a business to have both a PPP loan that is forgiven and to defer payroll taxes if that is something that is beneficial to your business. I also want to remind you that this presentation is available after this session. In fact, I've been told it is live now. It doubles as a toolkit, so you will find links in this spreadsheet, or excuse me, in this presentation to the sites that we have discussed today. Remember that you can find up-to-date resources, including the SBA and Treasury guidance once that is final, on the business and employer page at ndresponse.gov. Next slide, please. And as I've mentioned, as always, we have taken care to make sure that this slide deck doubles as a resource kit. As Eric mentioned, there is a lot of information available on the internet. Not all of it is accurate. There have been so many moving parts with the legislation as it has developed over time. So we once again urge you to consult your financial professionals, your tax advisors, your lawyers, your accountants, to navigate this and take advantage of the resources available to you that you know are credible. Finally, the recording and materials of this call will be available for later use. We ask you to share this information with your colleagues, with others in business. Share this information through your social media and trade groups. This is important information to make sure as many North Dakota businesses are aware of as possible. Thanks again for listening today. And please allow me to introduce Dr. Andy Stahl, our Interim Chief Health Officer, for a few remarks.
Thank you, Michelle.
You're welcome.
I wanted to just take time to say thank you for having me here today and to give you just some updates. I think that the quote on that slide there essentially takes away exactly what I want to present here today. And that is that it's my goal to help businesses stay open and do so safely as we start to navigate unprecedented times. I think that that's probably been mismessaged in the past, but you can hear it from me today that I'm here to help you stay open, stay healthy, and to do that in the safest manner possible. With that, I'd like to turn it over to Eric Spencer, President and CEO of the Greater North Dakota Chamber. Eric.
Thank you, Dr. Stahl. Again, I'm Eric Spencer, President and CEO of the Greater North Dakota Chamber. And beyond working with the Department of Commerce throughout the pandemic to assist business, one of the things that we do is we advocate on behalf of business here at the Greater North Dakota Chamber. And one of the things we're crystal clear focused on right now is encouraging Congress to pass COVID-19 business liability protection in order to protect businesses that follow CDC guidelines and the North Dakota Smart Restart protocols from frivolous lawsuits. If you'd like to learn more about our efforts, please go to ndchamber.com and click in the news releases section, or feel free to give us a call. Now, in terms of these business briefings, this is a special business briefing. We don't have any others planned. However, if there is a need to have one again in the future, the Department of Commerce, as well as the Greater North Dakota Chamber, will send out a bat signal to businesses across North Dakota to bring you all back. Now, as Commissioner Comer said, a recording of this business briefing will be available at ndresponse.gov's COVID-19 page in the business and employer section. It can also be found at ndchamber.com on our COVID-19 resources page. You can also find a variety of other resources at ndresponse.gov that cover a whole host of business questions. And so please, I encourage you to go to ndresponse.gov as well as ndchamber.com. And with that, on behalf of the Greater North Dakota Chamber, the North Dakota Department of Commerce, I'd like to thank you all for joining us today. And please stay safe, be North Dakota smart, and stay engaged as we all get through this together. Take care.
Thank you everyone for joining. The live event has now ended.